Hi everyone, today let's talk about the expanded strikes, then we'll take a quick look at the calendar, before we take a quick look at the charts before the Sunday video. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So the IAW is expanding their strikes up to 38 parts and distribution centers across 20 states. Only in GM and Stellantis. Apparently Ford is serious about making a deal and they were spared in this, but GM and Stellantis are getting more strikes, which is interesting, adding about 5,600 more auto workers to the strike. There have already been layoffs starting to happen, which is interesting. So, of course, you can't just strike forever. These people do need to make money. They're not making money while they're currently on strike, and it's basically a game of chicken between the two parties. How long can they not earn an income? And how long can Ford, GM, and Stellantis continue to not get vehicles made? They do have a lot of vehicles on hand. They said they had around 60 days of vehicles on hand between all of these companies. So this strike could end up going on for a while before these companies really see a major hit. And it's definitely interesting to see how this is moving forward. The closest between the group was Ford saying that they are still diligently working to make a deal, but that there are still significant gaps between key economic issues, and it really just seems like the UAE still wants a bunch of money, way more than the median income, and that really seems unreasonable. I've talked about this multiple times, but they're basically expecting a pay bump up to around $200,000 to $300,000 per worker, which is absolutely bananas, way above the median average income. But we'll see how it ends up playing out. Right now, it doesn't seem that we're any closer to getting a deal done here for the automakers. Moving over to the economic calendar, you can see we came in better than expectations for a lot of the PMIs, except for global services PMI, but that one was still above the 50 line. Definitely interesting, not great numbers. Eurozone services PMI, still below 50, but better than expectations. Overall, not great numbers, definitely mid-tier and mostly below the 50 line. Moving over to max pain, you can see we finished way below max pain for the first time in a while. Max pain was up at 442 for the end of the week, and we were way below that, way below all of the calls. Definitely a weak close. Put call ratio was at 2.2. We were actually below this biggest put wall, so that's definitely interesting. You don't typically see that, but it does happen occasionally. Moving over to the charts, starting off with the SPY here on the hour and the daily, you can see we rallied up into the pre-market, kind of topped out in the mid-session and then fell into the close. Bearish on the day, down 2.2%. Not terrible compared to yesterday. Obviously, that was a big day down at 1.65%, but we're clearly at trend support here. Definitely interesting. Big bearish momentum, big bearish volume, but you at least have to watch this trend. If it does hold, we could maybe see at least a slight pullback. If this breaks down, then you're watching for the 144 on the daily, which is at 426.43. Moving over to the NASDAQ just for a moment, similar thesis to the SPY, rallied up, topped in the mid-session, fell into the end of the session. It did look pretty strong, and it ended up holding a slightly higher low versus the after-hours pricing from yesterday. 357.54 continues to hold. I did get chopped up a little bit as it got above this 360.44 level, held there, and then broke back down. Overall, sideways price action. Technically up 0.01 on the day, which was interesting, but bearish momentum, bearish RSI, and it does look bearish going into the Monday session. If this area breaks, then you're watching for the 144 all the way down at 345.21. Moving over to the Russell and the Dow on the 4-hour, both bearish days. Not nearly as bad as yesterday, still holding above 175.93 on the IWM. Dow still above 339.11. So no change to the range for either of these, just a little bit lower in the range. Momentum ticked a little bit higher on the 4-hour. On the Russell, Dow not doing much of anything. Both are super oversold on the RSIs. Moving over to Apple and Tesla. Tesla had a dumpster fire of a day, massive down move. You can see we finished after hours at around 253.84, and then here today we ended up closing at 244.11. Right at these previous lows, took out that 144 on the 4-hour chart. That's what we were watching. Next level for me down at 232.57, and it does seem like we are going to hit that big bearish momentum, big bearish RSI. We are super oversold on the 4-hour chart, but that does not mean that this can't continue to go lower or below all the EMAs and SMAs, and it does look super weak. Moving back to Apple just for a moment, we did rally a little bit in the pre-market, fell in the after hours just like the SPY, but we're holding at a critical trend. Again, if this breaks, could look more like Tesla. If it holds, maybe we see a rally back up into this mid-range around 182.37. Moving over to staples and discretionary, both of these were super bearish on the day, as you would expect. Discretionary is driven by Tesla, which broke down massively. We're right at this previous low here. You could argue this is a double top or a slightly lower high. If this breaks down right below this previous low, that is going to be a massive move in my opinion. It's going to cut right through this area and move back into this highly traded zone down between 153 and 147. That would be very interesting, but this does look very weak now. Similarly, we have staples breaking down below this previous trend, and I'm still watching that 68.91 level just below there. Zooming out, you can see that marked the low here in June of 22. We did break down to that 66.27 level here in October of 22, and it does seem like we're kind of moving in that direction here on staples. Moving over to breadth, no big surprise here, continued to break down on the 200-day. 50-day actually held fairly decently, didn't move very much. It's already very low at 18. Last time we were really any lower than this was the October lows of 2022. And at this point, it does seem like we're headed into that direction. 200-day average definitely looking to test that same area going back to March and May of this year. Moving over to the dollar, we've been chopping here now for 2 days. Still a bullish close, a new high close, especially compared to yesterday. We also closed above my 105.50 level, also looking super bullish. Momentum, basically zero. RSI, still bullish, but it's been going sideways for a couple of days here now. Still interesting, still a bull trend. At this point, I would expect at least a little bit of a pullback, maybe even a pullback down to 103. That would be interesting. Hold a really solid higher low, and then we push higher, gain that momentum to the upside. This move is looking a little bit exhausted here on the daily chart, in my opinion. Moving over to the VIX, big wick down, held in the zone, bullish momentum, bullish RSI, basically no change from yesterday on the thesis. Moving over to my accounts, I ended up down about $70 on the day. I did trade in and out of a couple of positions, which I really shouldn't have done. I did end up rolling out here to 359 for the Monday close on those calls, so just my core position going into Monday. A little bit disappointed with that. I should have been a little bit more positive on the day, but not terrible, I guess. Overall, still a bearish bias, but I am kind of neutral going into Monday. Let me know down in the comment section what you think of the strike and how it's developing, or where you think the market is going to go over the next week or two. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.